Hey everyone, welcome back to Finance Flicks Hub. I'm glad you're here today because we're at a serious turning point for XRP holders and the broader crypto space. We've got ETFs launching, big institutional interest, and some fresh market action you'll want to know about. Sit tight. This is one you'll want to follow closely. 1. Why ETFs are game changers. Let's set the foundation. ETFs aren't just investment vehicles, they're a direct funnel for real capital into XRP. Here's how. Investors buy shares of an XRP spot ETF. Authorized participants create new ETF shares to match demand. The ETF issuer uses that capital to purchase actual XRP on the spot market. This reduces the liquid supply and pushes up demand, which can drive price higher. Timing matters. These purchases often settle T+1, so impact can be very fast. Historically, filings, especially early ones, out of Delaware, stirred speculation. Now, the path is clearer, and the potential is real. 2. Recent market context. Before we dive deeper, let's talk real time. XRP's price recently dropped to about $1.91, marking roughly an 8.7% decline in 24 hours. Trading volume surged over $8 billion in a day, indicating heavy repositioning by traders. Despite the newly launched ETFs, broader crypto market weaknesses, especially in Bitcoin and Ethereum's, dragging XRP, which is stuck near key support around $2. On the ETF front, the Bitwise Asset Management spot XRP ETF ticker XRP debuted with $22 million in volume early on and over $100 million in early inflows. So while the structural potential is big, short-term market headwinds are real. 3. ETF inflows and market impact. Back to the mechanics and how this links to the market context we just covered. When ETF inflows hit, the issuer buys XRP, reducing circulating supply. But if that inflow happens during a market-wide sell-off, as now, the buying may only partially offset broader selling pressure. Example, despite strong ETF debut numbers, XRP's price moved lower because of broad crypto market weakness. When multiple ETFs launch in close succession, for example, issuer A today, issuer B tomorrow, the cumulative effect on supply and demand can be magnified. Remember, ETF inflows feed the story, but they don't override macro and liquidity factors entirely. 4. XRP and DeFi integration. Let's layer the DeFi side into this. Tokenized XRP. Remember the example of MXRP on the BNB chain allows holders to engage in yield strategies, liquidity, provision, and so on. That means some XRP gets locked into DeFi protocols rather than being freely tradable. The combination of ETF inflows and DeFi lockups increases scarcity of tradable XRP, which supports price fundamentals over time. Given the current market dip, the DeFi layer becomes even more important as a structural anchor when sentiment improves. 5. Institutional treasury management. Here's the third leg of the stool. Treasury operations. A firm like Evernorth aims to hold XRP and use institutional-grade strategies, not just passive accumulation. This adds credibility for large investors who may have been on the sidelines. In a market like this, where price is under pressure, the presence of structured institutional adoption treasuries plus ETFs plus DeFi gives the narrative staying power. 6. Market dynamics and price implications. Putting it all together with the current market climate, ETF inflows act as spot purchases of XRP, gives immediate demand. DeFi lockups remove supply from circulation, gives medium, long-term impact. Treasury holdings signal staying power for institutional involvement, gives credibility effect. Given current price weakness, $1.902.10 sound zone and heavy volume. If ETF flows remain steady and macro conditions improve, XRP could be positioned for a bounce from this support region. But the caveat, if the $2 support breaks decisively, it may open the door to lower levels. $1.80 or less until market sentiment recovers. Trading view 7. Sentiment and adoption narrative. XRP's narrative is no longer just cryptocurrency for payments. It's shifting to bridging traditional finance and DeFi, institutional access, regulated exposure. K plus DeFi plus treasuries equals a story that appeals to finance professionals, not just crypto enthusiasts. In the context of today's market slump, these fundamentals matter more. They may anchor XRP's case even when short-term price action is weak. For viewers at Finance Flicks Hub, recognizing the difference between short-term price drops and long-term structural setup is key. 8. Risks and considerations. Let's be very clear. Crypto markets are highly volatile. Strong technical setup doesn't guarantee an immediate rally. ETF launches and DeFi integration are positive, but they face headwinds. Macro risk, Fed policy, equities, liquidity risk, regulatory risk. Right now, despite ETF and structural catalysts, XRP is reacting to broad market weakness, not just its own fundamentals. Always do your own research. DYOR. Understand your risk tolerance and time horizon. 9. Conclusion. We're in a very interesting moment for XRP. On one hand, ETFs are bringing institutional capital. DeFi products are unlocking utility. Treasuries are creating staying power. On the other hand, the market is under pressure. Price has dipped, and what happens next depends a lot on timing and broader liquidity. For anyone holding XRP or considering it, keep your eyes on ETF inflows, exchange supply metrics, and how market sentiment shifts. The structural setup is strong, but patience and discipline are required. Thanks for watching Finance Flicks Hub. If you found this breakdown useful, please subscribe and hit the notification bell so you don't miss our next deep dive. Until next time, keep learning, stay alert, and trade wisely.